Good afternoon, everybody, and welcome to this edition of Live Market Analysis, macro style. My name is Carl Capolingua. I'm the Market Analyst over here at ThinkMarkets, and it is a pleasure to be with you as we go big picture. We go all over the world and have a look at the indices, commodities, foreign exchange, bonds, and cryptos that are impacting your portfolio right now, but more, I think, than just how they are impacting your portfolio. We want to know how to trade them. How can we actually take advantage of moves in those various asset classes? Before we do, just a quick housekeeping item here. It's Ask Me Anything, whether you are live in the Zoom session with me or you're watching on any of the streaming services, LinkedIn, Twitter, Facebook, or YouTube. There should be a chat window somewhere. Ask me a question about something you'd like me to give you technical and, where possible, fundamental analysis over. Whilst those requests start to come in, I might flick over to the trusty Amy Broker platform. Why Amy Broker? It's just the one I use. You use the trading platform. It's not even a trading platform. It's just technical analysis. It doesn't link to anything. It doesn't do anything special. I know it says broker, but it's not really broker. It is just a really flexible trading analysis platform where I can program my indicators in and get those wonderful ribbons that we look at each week. And I'm going to zoom in now on the NASDAQ Composite because I have been in the media over the last few months, at times with a bit of egg on my face, claiming that we're in a new bull market in the United States. And I think for a little while there, it was looking a little sketchy, certainly around about hashtag banking crisis time. But look, that move through December, January, and the early part of February, I don't believe it was a mistake, as many other fundamental analysts referred to it as. I think there was some real money coming in. We haven't seen a failure back to those lows. We haven't even seen anything that even, I think, resembles a test of those lows around 10,207. And on the contrary, we've pushed higher and higher and higher. And what encouraged me, past tense, on that move was just the number of white candles. And white candles, big white candles, long lower shadows, do not happen by accident. They do not happen because market participants are unawares of what's going on in the world. It doesn't happen because market participants are making mistakes or are foolish. Market participants, I believe, always make sensible decisions based upon all of the information they have at hand. And they put their money where their mouth is. And that's what those white candles are. They represent fund managers investing, not for the next 5 minutes, but investing for the next 5 years. Black candles are telling us the opposite, that supplies in the system, people are nervous. But you can see there, certainly over the last, I'm going to say even 3 or 4 months, we do see a predominance of white candles. The other thing is we are making higher troughs. I think that's important as well. So we are showing that we are building demand, both in terms of some of the shorter term troughs that we see through here, no big deal. But I think 10,207 and 10,982 are very important. We compressed past tense, because 12,271 from back here and 12,270 from here, a clear area of supply where people who are uncertain about the future, maybe believing some of that FUD, the fear, uncertainty, and doubt, were supplying into the market. But eventually, I do think that the buyers, the longer-term investors, have soaked up that supply. We managed to close above that level yesterday. That's why I said past 10. So a very important close above a key supply zone yesterday. A pretty decent-looking candle as well. I thought a nice long lower shadow showing some indecision around the open. Obviously, we had some big data last night in the CPI. And even after the market had time to digest and assess the magnitude of that data and what it means for earnings going forward, they did vote to stay in and stay invested by the end of the day with a high close and a white body. So short-term trend, long-term trend, price action, and candles all looking pretty good, I think, there for the NASDAQ. Now, I don't know the future. I wish I did. So I'm not going to sit here and tell you that we are guaranteed to go higher. That it would be foolish for me to tell you that. But on the basis of what we can see on how demand and supply are interacting in the market, and the meager signs that we have that demand is winning. Hopefully they become really emphatic signs soon. What would make them emphatic? Well, we need to get to 12,656, so we need to hit that level, I would suggest, with some great big white candles telling you that FOMO is kicking back in, the fear of missing out, of fund managers starting to, what themselves, that their cash levels are too high. And you think hashtag banking crisis scares a fund manager? You think Fed's jacking up interest rates to 10% or hyperinflation, or another war somewhere, a war between China and US scares fund managers? Now, they are pretty scary, that last one. But nothing scares fund managers more than too much cash. By definition, your job as a fund manager is to manage funds. And if you're not managing funds, that is, if you've got your funds in cash, you're not managing them by definition. Any idiot can stick their own money in a term deposit or in cash. Your job is to get out there and manage that money, buy stocks, take risks, and give your investors a higher return. So nothing makes them poop themselves more than a rising market and too high levels of cash. So you think there's FOMO in crypto, you think there's FOMO in that little lithium stock you're watching, there's FOMO at the big end of town as well. And if prices start to go up, nothing will make prices go up more than prices going up. Okay, that's my opening salvo. Let's get to some of your queries today. We're going to go to the world. We're going to go away from the world of stocks for a second, and we're going to head over to the world of foreign exchange. And I'm trying to get my brain to remember how I get there, and I've just done that. There you go, it's just clicked in. I need to head over here. Amy Broker doesn't have all the data points in the world. It has many of them, but not all of them. And it's actually pretty expensive to get some of the data in there. So I will head here. It's the trading view window, which, hey, everybody listening to me can get access to for a very reasonable price. And I'll show you in a second. You can also get it for free on the ThinkMarkets platform. But this allows me here and Amy Broker to draw stuff. And that's what this session is about, being me drawing and hopefully teaching you a thing or two. So we're going to go to EURGBP for Hanelli. And whenever I do analysis, the first place I start are those trend ribbons, a really quick visual tool of what those underlying trends are doing. I don't want to spend too much time looking at candlesticks or price action, high peaks and high drops. That takes time. So my first pass is always those trend ribbons, and quite often those trend ribbons tell me there's nothing to see here. Move on. Now, I can't do that today because I've got to, show some respect to Anelli's request for analysis here. But ordinarily, I would go light pink, amber, so light pink short term, amber long term, and I'd go move on. Nothing to see here, okay? Typically, because I want to look for established trends. Now, this one, I think Hanelli's looking at this for a short, and I don't mind that because I'm seeing some other stuff that is drawing me to it. And look, we've only just broken beneath that long-term trend zone, and that's the reason why I probably would ordinarily pass. But I can see potential here for a short in as much as this, okay? We have broken through the zone, correct, okay? But the zone can be a little bit spongy, okay? And what we need to see instead, this is why I tend to be drawing in Amy Broker. I'm just more comfortable with it, but I will do my best to continue to draw here. It's not letting me do it. And what we often will see, because that zone is a bit spongy, we might see a retracement back into the zone. And that's what I want to see first. So before I can say with confidence that that long-term trend zone is dead, it's dusted, it's finished, I want to see how investors respond if we get back into it, okay? So I want to see a failure in that long-term trend zone. And then I would start to call that trend zone broken, long-term trend broken. I would start to contemplate calling the long-term trend down. I'm not there yet. And you can see why from the past here, that we tickle the zone. It's a little bit spongy. It's like a cloud. We tickle that zone, and you just look how strong it was. I wouldn't say we definitively closed beneath it last time, and we have this time. So that's considerably more bearish this time than last time. But I still want to see, Hanelli, how we go in here. And what I'd be watching out for are the candles, the black-bodied candles with the long upper shadow into that zone. And the shadow is telling me that, yes, we pushed back into the zone with some excess demand, but by the end of that trading session, we found the supply we were suspecting was lurking in the market. The supply, which, let's face it, has done a great deal of work to turn the price around from short-term uptrend, long-term uptrend, into something which is more representing equilibrium between supply and demand. And we've got an inkling here that maybe supply is starting to overpower demand and price can go down. So look, very interesting, not quite there yet for a trade. Hey, if you're already short, I think you can stay with that position. I'd, again, be watching how it trades in and around that orange zone. If you get the black candle with the upper shadow, you add to your shorts. Okay, that's what I would suggest. And then if we close beneath that low down here, and let me tell you exactly what that low is, that low there is 86.71. You're adding to that short again. So you're actually going to be quite short by the time it does break back beneath there. Can I buy this? No, that's off the table. I can't see a reason to buy it. And I think I've covered all bases there for the EURGBP. It's one of those crosses, when you think about what's happening in the UK, is typically in terms of interest rates, economic outlook, typically, not all the time, whatever's happening in Europe typically is happening in the UK, so you don't tend to see huge moves here. You can see on the scale, 84, 85, 86, 87. We've been compressing between 90 and 87. Not huge moves, in terms of foreign exchange, okay? And maybe that's another reason why you might go, look, it's something with a bit more oomph in it. Maybe we'll find it here. This one's from Craig, also wanting to focus on the foreign exchange, which is EURUSD, so the euro versus the US dollar. And typically, when we're looking at a currency pair against the US dollar, because King dollar, that's the global currency, we don't tend to say US dollar. We just say euro. We're trading the euro, or we're trading the sterling. And when we say that, it's implied. FX traders know you mean EURUSD. Okay, so let's just call this one the euro. And 100 bonus points. Get into your chat window there. Or if you're watching me on the Zoom, 100 points for if you can tell me what the slang name is, FX traders, for the sterling. What's the other thing we call the sterling? Okay, so the EURUSD, we've seen, and the other thing, Anonymous has instantly gone cable there, well done. What I was going to look at this one, but what I want to do quickly before I do this, and it's related to looking at foreign exchange. So see, for your FX traders out there, look what I've just done. I've just gone to my yields, okay? Because FX trading is all about yields. So I'm just going to have a look, what are the Aussie yields doing? And tend to look at 1 or 2 years yields for the short term, 10, if they have them there, you can see US 30s for long term. But let's just stick with the twos to keep it consistent. So we're looking at yields in Australia. You can see yields in Australia have risen, okay? Yields in the US have, for the most part, fallen. And I know it's marginal, but that's all it takes in FX. And it explains to you why the Aussie dollar, remember, I'm not mentioning the US dollar there, so the Aussie dollar versus US dollar has been rising, okay, contrary to many people's beliefs. We've got that surprise rate hike here in Australia. Let's have a look at, as we're talking about the European yields, I'll tend to look at the German ones there. You can see that they've actually been trending a bit lower, pretty much the same as that, maybe a little bit more, okay? And we could actually go and calculate these in percentages, but I'm just going to stick with the visuals for now because I just want to keep moving on this. And we're going to go to EURUSD, and we can see here that we've seen a little bit of weakness in the euro versus US dollar, and it does match up with that idea that the bond yields in Europe have been falling back a little bit faster, only a little bit faster than the ones in the US over the last week or two, okay? And that's why I've seen some weakness here. If you go further back, you'll find that there was an expectation that the Fed would be pausing or cutting rates, and that the ECB would continue to hike rates, and that's caused the strength. But that's just turned around a little bit. They're all fundamentals, aren't they? What do the technicals say? Well, the technicals, let's face it, have to kind of match the fundamentals, and pretty much more than ever when it comes to FX trading, certainly when we're looking at daily charts. When we're looking at 5-minute charts, hey, anything goes. And I don't tend to do that, but I'm happy to do it if you want me to. So, hey, Craig would pipe in, check out the Euro for me, 15-minute chart. I'm happy to do that because technicals work over any time frame. That's the great thing about technicals. Now, Craig specifically asking for a short trade. Craig, I'm going to say no because I've got a short-term uptrend and a long-term uptrend, so it's not a short trade for me. But I get where people go with this, and they say, okay, well, it's about to break down through here. That guarantees it's going to come back to this, maybe. It's not the sort of trade I'm doing. I'm trying to find the ones close to the light green zone with the right candle and looking for follow-throughs in with the trend. I'm a trend follower, not a trend fighter. But I can see where you're going with it. Now, here's a little bit of a word of advice, Craig. But it could be the worst advice I ever give you, or it could be the best advice. Let's see how this one plays out. You don't, if you want to go short the euro, it's not there in the daily chart. I'm not going to do any more analysis on that. Okay, I can say, oh yeah, maybe if I squint, I can see it. But no, it's not there for me. Okay, you know my rules. But that doesn't mean it's not there in, say, a 4-hourly chart where we can see how the trend is now going from a short-term uptrend to actually a short-term downtrend, from a clear long-term uptrend to a long-term uptrend that actually is 50-50 here. You can see how we've gone from this demand-side market really over the last couple of weeks into an equilibrium market. And if I keep zooming in by ways of changing the periodicity, so let's say we go to a 1-hour chart, now I'm in a downtrend, and actually, Craig, looking at this and this at that zone and some candles here, yeah, I could advocate for going short. And then you're going to shout at me and say, hey, Carl, this could be the worst advice you've given me, because you've just told me if I want to short the euro, just go find a chart that matches my thesis, and then I'm allowed to short it. Okay, and it could be the worst advice I give you. Here's where it could be the best advice. Okay, you need to find the periodicity that suits your trading style and your ability to monitor the markets. Okay, and sometimes the two don't always match. So in terms of style, you could say, hey, Carl, I want to be a short-term trader. That's what I'm after. I want a bit of action. I want a bit of excitement. I want to be trading quite regularly during the day. Okay, I understand I'm not going to make thousands of pips. I'm going to make tens of pips maybe, but I'm only risking a few pips each time. That's kind of what I'm after. Okay, well, you need lower periodicities. You need 5-minute charts, 15-minute charts, maybe even an hourly chart is starting to get too long-term for you. But here's the catch. I do believe you need to check the market in line with your periodicity. So if you're on a 15-minute chart, you need to check it every 15 minutes. Okay, well, no problems, Carl. Look, I've got a bit of time. I put the kids to bed around about 8 o'clock, and then I've got a couple of hours before I go to bed and I can watch the markets. Okay, well, that gives you 8 15-minute candles that you could possibly watch all day. And if you expect all of the best trades to occur in those 8 15-minute candles, then sure, go ahead. But if you can't watch the market every 15 minutes, that's 24/7. It's a 24/7 market. I don't think you should be trading that periodicity, because you're going to miss all the best trades. In those eight candles you are going to see, you're going to get a dud trade. You're going to take it. You're going to lose money. You go to bed. You wake up the next morning. You go, oh, that was the best. Why was I sleeping then? And then you have to think about never sleeping again. Okay, can you check the market on an hourly basis? Maybe, maybe not. I don't think so. Can you check it on a 4-hourly basis? Well, actually, probably you can. Maybe you might miss one when you are asleep, okay, unless you want to set an alarm in the middle of the night to check it that one time and see if there's a trade. But we're getting more consistent with our approach. I think everybody surely can check the market once a day, okay? And if you are a once-a-day trader and it allows you to be consistent with the approach, big tick, 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 you can't short the euro, okay? So yes, Craig, we can find a periodicity where we can short the euro, but I don't think it's necessarily an approach you'll be able to be consistent with and maintain over a long period of time. And I know we digressed, and I know some people get upset, say, hey, Carl, just analyze the bloody charts, okay? But some people say, hey, I like the education as well. So I'm trying to get the balance right. Perry says, let's have a look at the NZDUSD. This is amazing. I'm so happy we are looking at currencies here. I don't know why I'm typing that in, so I'm pretty sure I've got it on my list here. Let's go NZD, there it is, NZDUSD. This one is heading up. So the Kiwi is the nickname there. The Kiwi is appreciating against the US dollar. And that's a little bit of a change around from what we've seen. A little bit like the change around we've seen with the Australian dollar. And we don't know what the Aussie dollar looks like. You can see it's a similar sort of rally through there. Okay. What can I say? Is it a long? Is it a short? It looks pretty flat to me overall, doesn't it? On the daily chart. Could I find longs on other periodicities? Yes, I could. Let me know which periodicity you want to look at. Okay. But on a daily chart, I don't think there's enough in it just yet to be going long. I'm concerned. Why? Why are you being a party pooper, Carl? I'm concerned about this. So I'm looking at this area up here. I think we're going to have supply. And if I change that color, if I can remember how to do it, this is the way we do it. There we go. it's about making a trade work. So I can see your uptrend. I got it. I get it. Okay. Also, if we select this and we clone that and we move it down here, it's probably too big to draw it like that, but we are in a little bit of a supply area here, and you can see the two upper shadows that are responding or manifesting the supply that's coming from that point of supply. Okay. When I look down, so if I'm making a trade here, I'm going along here at 63.80, give or take, right? I look up and I can see where I'm going to have some issues, right? Somewhere up here. And I would draw it probably, see the top of where that supply started there, and it actually goes all the way up to here. So that's the supply zone. So I look up, I can see that supply zone. Okay, and if I'm getting in here, I also need to look down. I need to look at, well, what's holding me up here? Okay, is there beneath me a floor which I can set my stop loss beneath that's going to protect me? And by a floor, floor implies, thinking if I'm in a multi-story building, because that's really what a chart is. We've got these, levels made out of concrete which should protect my stop loss. And for us, when we're looking for a long trade, those levels need to be areas where there was demand in the past. And I can certainly see areas of demand. Let me see if I can draw one in here. Okay. And I will change that color to green to represent demand and pink to represent supply. So if I look down, I can see there's a long way to that last trough. And I get this demand all the way through here, and you might be a little bit more aggressive and try and find something else. Like, that's not a trough, because this is an inside bar, doesn't count. But certainly I can see some demand at the bottom of this shadow. How do you know? What's a white candle? There had to be demand there. No doubt about it. There had to have been a considerable amount of demand there. So maybe I can set my stop loss a little bit tighter. And if that's the case, and let me just, hypothetically speaking, draw our stop loss sort of underneath that one. If I look up, I can make reward to risk work. But if I'm not happy with that, if I want a trough, an actual trough, okay, I have to look down much further. And then if I'm getting in at this zone here, it's much, my reward to risk isn't working. I've got much further to the downside to fall before I land on something, before I look up and see the ceiling, which represents the next concrete barrier up there, isn't it? Okay, so it's not something I personally would go long. I can see what you're looking at, but it's not for me. And I'm only going to do this and count to 30, and this will be done if you're on one of the lower periodicities. There's your light green zone. There's your dark green zone. You get where I'm going with this? But you only look at the 4-hour chart. You don't look at the 4-hour chart, then look at the daily chart, then you look at the 15-minute chart, then you look at the 5-minute chart. And a lot of FX traders do that. I think it's a mistake. Okay, they go, I've got to get confirmation from here, from a higher periodicity. They get to the high periodicity and they change their mind. Oh no, I'm not sure about it now. Okay, just look at one periodicity. Okay. So again, when we're looking at, we don't do this. Hey, we don't do this on the Aussie stocks, do we? We look at daily charts, happy days. It's all good. But when we're looking at trading FX and commodities, these intraday periodicities can be a panacea. So many more trades. Yeah, but they can also be, what's the opposite of a panacea? I don't know. Type it in. Let us keep moving here. Let us go to the iron ore chart from Colin. Yes, we can do that. A couple of ways we can slice and dice this one. So we can, I prefer to look at the Chinese iron ore chart. Okay, so the price of iron ore in Shanghai. And I'm going to go to this one here because I've got my scratchings on it. So bear with me one more second. There it is there. It looks a bit crazy, doesn't it? I mean, it's huge moves up, huge moves down, and it is a little bit crazy, to be fair. I mean, I can change the scale or cut a weekly chart. It might look a little bit more sensible. Let's have a quick look at the weekly chart here. I don't think it makes it any clearer to me, does it? It's just look at that long-term trend. It's wobbling around that 750 yuan per ton. The short-term trend is clearly down. The weekly candles are not great. We've got a little bit of a rally. If anything, the rally can hit 750, 760, 770. Watch for the candles there. I'm just going to flick back to my daily chart because I know it's confirming. But this is your area. Yeah, look, somewhere between 760 or 780. We're watching potentially for this rally to either terminate or show it's got some legs. How do we know it's terminating? Black candles, upper shadows. What do they look like? They look like this. So we're watching out, and you're almost seeing one in yesterday's trading, to be fair, very close to one. So maybe it's already happening. Let us draw that and draw this. So something that looks like that in the pink zone, or potentially it could push even into sort of 780 where that orange zone is starting to kick in. Or the best friend of that candle is this one here, and you might even see it actually not look like that, might even look something more like that. And of course they are our supply buddies, which indicate excess supply in the market. Now the opposite of those would be obviously white-bodied, lower shadows. If we're starting to see those in the zone, then I think it's got some more legs to the upside. Okay, seasonally, however, there's not a lot happening this time of the year. We start to see a little bit of weakness off the top of my head. It's just off the top of my head, I think through August and September. And then we see quite a substantial amount of strength through the back half, November, October, November, December, I should say, into January, February, and March. Okay, it's not the right time of the year for a big rally in iron ore, typically. Okay, so nothing in that chart actually is really at odds with your seasonal moves there for iron ore. What does that mean for your BHPs, your Rios, and your Fortescues? I think they've obviously they've pulled back a little bit, but I think they've weathered this pullback pretty well. I don't think you're going to get a rocket under them anytime soon, but probably unless we break through 675, maybe the downside is a little bit limited as well. I think when you talk about bulk commodities like this, I'm just checking if we've got a request for it yet. We do have gold. It's not the one I want to go to. I want to go to copper because I want to keep on this theme of bulk commodities. Let us head over here and do that and get out of the 4-hour charts and head back to the daily charts. That actually, just before I do that, as I'm in this area, it's probably worth discussing how, look, we can't trade iron ore with us, which is regretful. I wish we could, but certainly we can trade copper. And you can get your charts through here as well. And you can see we've got the ability to go through those periodicities as well. So if you're trading copper, you can go to your 4-hour chart, for example, or even down to your 5-minute chart. This is the ThinkMarkets trading platform, ThinkTrader. You can get it on really any device, really, that has a web browser, or you can get the app as well, which is also very, very good. So I'm just going to go back to daily here. You can see here the lower peaks, lower troughs, and we are just sort of hanging in there just around that 380 level. But I do feel that we're at risk of breaking through 380. This concerns me a little bit. In fact, that's not where I want to go. Sorry. I wanted to go back here and click on HG1, which is high-grade copper. And you can see some of the analysis we've done on in the past. We got a little bit excited there, I must admit, and I think we started to add a little bit of risk here, but very quickly had to change and switch those positions. I don't know if you ended up going short down here. Maybe you have, and maybe you're looking at this now from a short perspective. And if you are short, I think that's the place to be. I know copper bulls would be quite angry and quite devastated by that, but don't shoot the messenger. All right, the chart is the chart. I don't make the charts. I just comment on them because I think we're looking quite sketchy here. And I'll give you that level there. That low is, you can see there, 383. And a close beneath 383, I think we're in a very bad place for copper. Where could it go to on the downside? Well, that low there is 371.75, so that's called 372. And then failing that, we could even see something as horrific as 355, okay? Can it turn itself around? Can it find a way? Looking at this candle here, looking at this candle here, looking at the pushback. I mean, the market is looking at those candles and looking at them as signals to start selling again. I don't think so. You give me this chart, I'm going to say eight times out of 10, a good 7.5, 7 times out of 10 at least, this is going down. And it does concern me a little bit because we looked earlier on at the NASDAQ, and the NASDAQ, obviously, we said, look, hopefully stocks are in a bull market. How can stocks be in a bull market if copper's going down? Look, it is possible. Copper has its own demand-supply dynamics, and copper zealots will tell you that there's no supply. of course, and there's all demand. That's not true. There's plenty of copper around. Don't worry. It just needs to get back into warehouses. And copper prices can change very quickly. And that doesn't necessarily need to undermine this thesis that we can have a bull market in stocks, okay? It doesn't need to necessarily confirm that, well, Dr. Copper is going down, therefore it means global growth is in the toilet. But I will happily admit that iron ore going down at the same time is not a great sign. What we can do, let us head over here to our commodities, and let's find, I know I'm not looking at your requests here, I've kind of gone off a tangent, but indulge me a little. Let us have a look at some of these other bulk commodities and see if we can get some signals here for how this global growth story is looking. And I'm just going to change that to a line chart for you. So we're looking at aluminium, key industrial metal. Hey, is it trending higher? Is it trending lower? I think we all agree it's trending lower. That's LME copper. It looks similar to the high-grade copper, which trades in New York I just showed you. Okay, this one here is in US dollars per ton. The last one was in dollars per pound. But hey, effectively looking pretty similar. You give me this chart 10 times, I'm going to tell you 7 times it's got to go down. Okay, that looks pretty terrible to me. And maybe it means something for your investments in your copper stocks at the moment. Maybe it doesn't. Maybe they can go up anyway. Look, that's not my job in this session. This session is all about looking at the big picture. That's the iron ore chart there. Okay, you can see a small bounce towards the end, but otherwise it appears to have cracked that long-term trend, or the long-term trend has cracked back to the downside. We can also look at something like this, which has it in Australian dollars. I know that's not working because it's got this silly thing here where the percentage signs ruin things. We have looked at that one. Lithium, I was going to save that for its own sort of discussion, and it's not in that list anyway. I need to go here. Lithium. Let's look at lithium carbonate. You see a little bit of a bounce there. Actually, in fact, it's bounced 27% off those lows, and we don't have candles here. You've just got a PM fix on that one out of Shanghai. So, yeah, we won't know until it starts to turn around. But just note that the big Chinese lithium producers put their own self-imposed price cap around 250,000 yuan per ton. So it overshot that to the downside. Such was the panic selling in the market. Maybe that's where we're going to see it gravitate back towards and find a home there. If it bounces back lower from that, then that would be concerning. If it finds a home there, then I think that's probably okay. Actually, I think most of our lithium producers would probably happily take that, and therefore what that means on your lithium hydroxide price, which is probably pushing that back into the high 40s. But we were looking at the bulk commodities here, not necessarily your energy commodities, and nickel. That looks to me like it's breaking lower. Also, you can see the power of that long-term trend and how hard it is sometimes in a downtrend to get back above it. We seem to be pushing back beneath it. And look, for your interest, lead looks a bit flat, no big deal there. Tin, I was going to say it looks half decent, but not fantastic. And then zinc, in fact, is probably looking the worst out of the lot of those. While we're on this theme of bulk commodities, I'm going to head back here and let us keep going on this sort of a tour de bulk commodities. And I want to look at this one here, which is Newcastle coal futures. Certainly a bulk commodity, and it does appear, for all intents and purposes, to be breaking lower again out of that consolidation between sort of 170 and 200. And that could easily come back into the 130s, and we don't want to see it go back into the 80s, but if you look at sort of where the long-term price dynamics, where the prices tend to be in the long term, then somewhere around that sort of 100 area, sort of through here, you can see is about 100, 110 is not untoward, and it would still be, I think, a pretty good outcome for our coal producers, but certainly not what the hype or the people who bought on the hype wanted. Coking coal, in line with that global growth story, looks to have broken lower. And then we get into some of the energy commodities here, which continue to move in that downtrend, as exciting as it kind of got there for about 5 minutes back then. Interesting little rally here, double bottom, but I'm not going to, certainly not looking at longs at this stage. and natural gas is continuing to just bounce around the bottom there. Uranium, we haven't checked up on that recently, and it appears to be, I guess withstanding some of the pullbacks in those bulk energy commodities, and maybe doing its own thing, running its own race, because we have seen a pickup in that contracting activity. So the big utilities going directly to the producers and locking in long-term contracts. So that's starting to look quite interesting there. Which is, yes, that's weird. That chart looks very different. Oh, okay, we've back adjusted it. Okay, that's fine. So looking quite good on uranium there. I've probably, actually, the only thing I haven't done, and now we'll get back to the requests, is look at the gold price, and that is coming in from Buzz Lightyear, who's watching on YouTube at the moment. Look, last time I looked at this, I think I was quite bullish. I think it might have been one of these candles here. Would have been the 4th, I guess. So it was actually here. No, so we did have that upper shadow. Actually, no, it would have been the 3rd. We wouldn't have had the candle for the 4th yet, because that would have come that high. So last time we looked at it, I had 2 great white candles here, and I guess I was pretty confident in saying that it was, it was going to go higher. Since then, we got these nasty 2 little candles here, which does dent the bull thesis a bit, okay? But I think we're okay. But I'm going to move to alert, not alarmed, instead of just happily riding the trend, happy holder. I'm going from happy holder to alert holder, okay? Because I don't like that black candle. I don't like what it represents. I appreciate there was a little bit of a lower shadow here, and that is good. I don't like how feeble the rally back from that black candle's been. In fact, really, we haven't challenged the top of the black candle. The top of the black candle where the selling started on that open. So we really haven't challenged it. We tickled it last night, but we failed. So I'm just going to be a little bit cautious here and just say that this, I think, becomes a pretty important level, okay, for your shorter term traders. Certainly if you're trading the underlying commodity, because you can trade gold with us. And I think if we're closing beneath that low, and that low is 1998, let's call it, then I think you're going to start to take some profits out of this one. So minus 1/3 beneath there. And then I would say if you're closing beneath that one, you're going the next 1/3, and probably say beneath here is your final 1/3. You're giving up on this gold bull run. Maybe I'm jumping at shadows, but hey, the market will tell us tonight with the candles that we get. And if we get white candles, we won't have to worry about any of that. If we're closing back above here, and you can see that is the supply zone now, that high there, 2072. Why 2072? Why did, if you don't look at charts, if you're, I see so many talking heads tell me about gold. Oh, gold is great. Gold's the only true store of value. Forget your cryptos. The central banks are going to print trillions of dollars. The US government's not going to pay its debts, and that's why you have to buy gold. And yet they can't tell me why 1272 was the exact high on this day. 1272 had to be the high on that day because you had 1270 here, but if I zoom out even further, you've actually got 12, that high there is 1272.50, okay, to be exact. I've rounded up to 1273, so that's why you had selling. Yep. There we go, that's the one. Tell me straight away, Khan, tell me straight away. If I go 30 seconds and it's not the right chart, tell me straight away. Okay, so as I was saying, this is the level down here. That low there, 1998. We're going to get out beneath that. 1969, another third, and then 1934 is the next third there. Okay, I know that low says 1935. 1934, there you go. Okay, 2072 had to be the high. Why? Not because of that 2070, but because of that 2072.50 there. Okay, it is a problem. That's my point. It is a big deal. Be afraid of it if you're long gold. Until we get above that, I'm going to remain cautious, I think, is the view there. Palladium. Where am I going to get Palladium chart? This one's coming in from David. Platinum, I know, looks very good. I've definitely got a chart here on platinum. Let's look at that first, and then we'll go to Palladium. Let's go into candles again. Short-term uptrend, long-term uptrend, a little bit of pressure coming in at that supply point. We don't want to see that supply point reinforced because it would have more serious ramifications. I need to go back here. That's the platinum chart. The question was for Palladium. Let's have a look at Palladium. I haven't looked at this one recently, and I haven't looked at it because it hasn't given me much cause to do so. Look, there might be something in it, David. I know because everything else in precious metals has run. I would consider adding a third on a close above that high there. And that high, I'll give you that the value is 1649. So let's say 1650 or better. And I think you can add a third on this one. But it is a cheeky 1/3. It is a speculative 1/3. And, you know, it's super aggressive because that long-term trend hasn't changed, but you are going on the break of the double bottom, on the break of really what should be raising the supply, that old point of demand, acting as supply. We've tested it once and we're getting through the second time. So I can say, and it's super speculative, super spec plus 1/3. That was to occur, and only if that was to occur. And yeah, I mean, where do you see stop loss? I mean, all the way down here? I don't know. Yeah, it is super speculative, but you're only doing it because at the end of the day, you're putting a small amount in, you're going to test the waters, okay? And that's why we're not going in all guns blazing. And even then, I've told you, it is a super speculative trade. How we're going for time? Not too bad. I could probably get to the rest of these. Is supply coming into the daily with reference to Palladium from David? No, I don't think so. No, there's a tiny little black candle there. I think it's fine. Marco has asked about the lithium chart, which I've done already. Fantastic. Change the screen, says Barry, shouting at me. Fair enough too. Chart is showing uranium, not gold. Fair enough. Thanks, John. Thanks, Carl. Okay, and let us go now to the other place I look. And we are going to say, can I look at XSO, ASX Small Ordinaries? Sure can. I've never had that request before, but yes, absolutely, I can look at it. I'm going to head over here. And you can see it does get difficult in these sessions to juggle all the different platforms I'm using to try and get you the best analysis. And there we go, XSO, Small Ordinaries. Okay. Let's look at that. I'll come back. Let's look at it within the context. I'm going to add that up here so I can look at it. And I'm going to go here. And let's have a look at the ASX 200, right, to compare. So the benchmark, at least it's in an uptrend. Now this actually looks a little bit concerning, doesn't it? We just talked about how good the NASDAQ is. If that gets beneath there, I think that's in a bit of trouble. Okay. Maybe, okay. Hey, the NASDAQ technology shares, right? Australia, iron ore shares, nickel shares, copper shares. Maybe it is starting to make a little bit more sense. Okay. Now let's head over to the small ordinaries, which I added down here. And actually looking pretty good compared. And by that, I mean the price action is better. The short-term trend is better. The long-term trend needs to be broken. If I didn't know any better, I'd say, you know, this could be gearing up for a breakout here. Potentially limited by a little bit of supply around here, but I'll take that with a pinch of salt on an index like this. I'm not sure why you want to know about it, because I don't think you can even trade it, but I'm guessing the question there from Daniel is, well, I've got maybe some stocks in the index and I think they're going up. Look, I'd say the probability is leaning towards a rally, a continued rise in that index rather than a fall based upon the trends, the price action and the candles. Perry, can I look at lithium carbonate? I did do that earlier on. Thanks, Perry. I didn't look at lithium hydroxide, but the price chart hasn't moved from the data provider I get it from. It has gone up ever so slightly, depending on where you go. If you go straight to the Shanghai Metals Exchange, it has gone up a little bit more than the COMEX price, which is where I get it from. That COMEX contract is extremely liquid and barely trades at all. Can't see the candles, change the screen. Need to change the screens. Okay, looking at uranium. Good, I got to the end of that list. Over here to the streamers. Buzz, like you're saying, that they enjoy the mix of technical analysis and education. I appreciate you letting me know, but Buzz, that's important. Change the screens. One more request for oil and Bitcoin. I didn't have a long look at oil. Let's have a slightly longer look at that. And then I've got to get to the S&P 500. We might close it out there. Before you run away, actually, what I wanted to do today is talk about this. And this newsflash, breaking news, we intend to, at this stage, run a live and in-person event where you can come down and meet me in person. Yes, I'm a real person. And a couple of my good friends, actually. And I think Market said, look, we want you to run a live event. Nobody's doing live events. Let's give them a go. Let's actually get out there post-COVID and meet some people. Now, if we don't get the numbers from you, if we don't get the commitments for you to attend, we'll run it as a bloody webinar, okay? You know the drill there. But that's why we're seeking register your interest, okay, at this stage. We want to know if it's worth us spending a few $1,000s on a bloody hotel room, okay? You get where I'm going with this. But Jason McIntosh, a good friend of mine, who you will know, probably seen him on Ausbiz as well. He runs Motion Trader, and our trading styles are very, very similar. But I'm going to get him to talk about algorithmic trading and how you can use that to improve your trading outcomes. And an old friend of mine, Kel Butcher, who you might have read one or a few of Kel's books. He's got a few of them out there on how to trade foreign exchange, how to trade commodities, and a must-read, his 20 common trading mistakes. At the moment, he's managing funds for M+ Global, and he's going to talk about how to trade foreign exchange and commodities like a pro. And then I'll be talking about how to invest like a hedge fund manager, and that'll be worth your price of admission there as well, of course, which is free, by the way. There is no price of admission, but you do get your 3 trading professionals live in person. You can go and touch them, and you can maybe even bring your Kel Butcher books along and he will sign them for you. Not that I think that makes them any more valuable. Boom, boom. Kel's not listening. How to manage your risk, how to think like a successful trader. And it'll be just good fun, I think, to get out and about. Now, again, we need registrations of interest, so we're going to commit the funds. That's how you do it. Nick Coulson, who joins me regularly in these sessions, that's his email, and just send him an email. Say, hey, Nick, I think it's a great idea. I will be attending live on either the 22nd of July in Melbourne or the 29th of July in Sydney. Let us head back here to the, what was I doing, the all chart, and in fact, we'll head here and here and here. I like, I can't say I dislike these sessions, but I do like Tuesdays better, where I don't have to jump around so much. But I'm going to go, let's do West Texas crude oil. You can trade either West Texas or Brent crude with us on the Think Trader platform. I think you automatically look at that, and I'm attracted. Look, don't get me wrong, I'm attracted to this. I'm still holding my text tool. I should be able to just move that. Yep, there we go. I'm attracted to, obviously, that shadow. I think that's really impressive. I'm attracted to that white candle, and I like the fact that it's done it before, right? We've got these 2 really significant shows of demand at 66, 65, but I don't think it's enough to get me long. I just think that there's just been so much consistent supply in this that I'm just gun shy. I know we had a little crack here, and I'm a little bit gun shy to have a crack again. So for me, whoever asked this question, it was over here, Buzz Lightyear. I think it's pretty neutral. It's stuck in the middle of that range between 64 and 82, isn't it? And therefore, you could wait for some candles if you wanted to go long, if that's the way you're thinking. Otherwise, the big black candles. And I think you could trade short here. I think if we saw the black bodies and the upper shadows, I think you can get short. I think you can add that 1/3 into the market on the short side on this basis of just testing that trend, or looking to confirm that long-term downtrend. Okay. So let me just say, it's probably not even worth writing in. You need to see the candle first. The candle I mean, the big upper shadow. Okay, I was supposed to go to Bitcoin next. Let us head over here to Bitcoin. And I might actually head back to here because I've got my scratchings on it. I don't have my scratchings in the trade view window. It's not where I spend most of my time. Okay, so here's Bitcoin. It cracked. We saw another Bitrex filing for bankruptcy. Doesn't help the space at all. 26,972, close beneath that, and maybe this phase is over for a while. It's extremely disappointing. I'm I'm having a crisis of confidence with my own crypto trading, because I went from, here at 31,000, about to, or thinking that I was going to really cash in on my crypto, and then back to square one, really. Should you buy it here? Look, based upon my technicals, no, I can't see a reason to do it, but crazy things do happen on Bitcoin. If you saw a white candle, and what does one look like? If you saw something like this, off this level, you could entertain dipping a toe in the water, but you need to see that white candle first, okay? I need to see at least some confirmation that supply is in the market. So it's pass for me until that occurs. And I promised that I would finish off with the S&P 500 index, and definitely have scratchings for this one. Not as good as the NASDAQ. The NASDAQ certainly benefiting from that sharp drop in those US 2-year yields. In fact, it went out through the curve. And the NASDAQ, because it is more interest rate sensitive, doing better. It would be good to see the S&P 500 catch up. It would be good to see the Russell 2000 catch up. I do think that we saw how the Aussie market isn't maybe gelling either, and it will be probably the Russell 2000 heading up to maybe help us go to the next level, and that would coincide, I think, with a recovery in the one which we have to watch. It's compulsory, isn't it, every week to look at this and see if this has gotten better, and it hasn't. And that's still concerning. There's the NASDAQ banking index, and then the regional banking index is kaput. So we started the session optimistic about what's happening in the NASDAQ. We finish it quite pessimistic, really looking at those commodity moves, those bulk commodity moves. The banking sector, the Russell, is all a bit depressing. Nikkei, let's do this last one here, and then we will adjourn. We've got the Nikkei for Hugo, which actually looks really interesting. So, this is tradable, I think, here, and the only thing that would just give you cause for pause, and it's just a pause at the moment because we're working through that supply there. But I could add some risk on this, putting aside all the other stuff, just trading the chart and what the chart is. I could add some risk on this one and see where it goes, because that's a really nice trend. I get there's a little bit here. Maybe that's what, who asked me if Hugo's looking at. But as long as you can get the right stop in, Hugo, probably somewhere around here, I think you can make that reward to risk work. And then, maybe that's your ultimate target. But I think this is a really nice trend. Hey, I've been watching this develop for a while, and ideally, I know we can't go back in time, but these are your two big candles here, Hugo. They're the ones that really definitively drag you in. So there's nothing since then which would cause me to reverse that. So I'm happy to go plus 1/3. But I think much better prices could have been achieved based upon my models. Okay, I think we're done. Let us head back to the Presso. And just a quick reminder, obviously, about that event. We need to know you want to make it. If you're in my hometown of Perth, Adelaide, or Brisbane, or anywhere else, if these are successful, if the model shows people do want to come out again, make that trip into the city and hang around with, three so-called experts for a morning, then we will expand it. We'll roll it out to the other major capital cities as well. But please let us know. Other than that, if you want to do it old school, hey, electronic webinars. Can you believe I'm saying that? Old school now is webinars. I'm back on Tuesdays for the ASX edition, and I'll be here tomorrow for the USA edition. I think you've got to see it. Looking at that NASDAQ chart, I think you've got to see it, despite all the other stuff that we looked at today. Fundamentals and technicals registered there. If you're watching, so I should say before I go, the ThinkMarkets spiel, which of course is trade with us. We are the good guys in the Australian broking scene. We've got everything you need to trade in terms of ASX shares, but also the stuff we talked about today. You can trade the Nikkei, jump on the ThinkTrader platform, enter your entry price, your profit target, your stop loss, and the platform will do it all for you. Commodities like gold, copper, you can trade with us. Oil, you can trade with us. All of those foreign exchange pairs we talked about today are all tradable with us, and you can trade them over any time frame you want. Market-leading spreads, commission-free on those US shares. Award-winning broker. We've got offices all over the world. We're regulated all over the world. And, of course, the best platforms and the best customer service. If you're watching on any of the streaming platforms, make sure you hit the thumbs up button to let me know you like what I'm doing. I'll continue to do more of it, but also subscribe to stay notified of any of my regular updates. It's been a pleasure chatting with you today. Hopefully you got lots out of it, and we'll catch up very, very soon. Before you go, however, don't forget that everything we've discussed today is general in nature. It has not taken into account your personal financial circumstances or particular needs. So before acting upon any of this general advice, you should consider it carefully or seek the help of a financial professional. You can learn everything you need to know about ThinkMarkets and our products by heading to our website and downloading our product disclosure statement.